I'm here today with Scott Wolle, CIO of Invesco's Global Asset Allocation Team. He and his team mentioned the Balanced-Risk Allocation Fund that won this year's Morningstar Award for best allocation fund in the Netherlands. Scott, congratulations.
Thank you very much.
To what do you attribute your team's success in the past year?
Well, really, it's staying true to an investment process that we've had in place for well over a decade. And really, the name of the fund is very descriptive of that process, that balanced risk notion. Really, what we try to do in the fund is to think about the main kinds of economic outcomes and ensure that we have sufficient amount of assets in the portfolio to be able to take advantage of those different outcomes. So specifically, that means thinking about growth outcomes, those that usually benefit equities, more defensive outcomes that require bonds and other assets, and then more inflationary-based outcomes that would really benefit commodities. And last year was a year where, while it was certainly growth supportive in terms of central bank support for many economies, and that helped equities a great deal, it was also one where we really started to see inflationary pressures, and that really helped commodities really to a degree that hasn't been true for much of the last decade, when, of course, we've had a quite extreme commodity bear market. On top of that, we also do have a tactical process that helped us navigate some of the vagaries of the last 12 months as well, and largely emphasizing commodities and equities at the expense of bonds and other defensive assets.
Now, of course, risk and volatility are now at levels that were hard to imagine at the end of last year. What does this mean for your strategy?
Well, so in large part, it allows us to just continue to execute exactly the way that we have been. So if we think about the environment today, it really is interesting. Where back in January, it was a period when both equities were struggling and bond yields started to rise. But we really had commodities as being a part of the portfolio that helped to buoy results. And today we see just a bit of a shift from that with the geopolitical conflict in the Ukraine. Of course, that's still weighing heavily on equities. And commodities continue to do well, but now bonds have really started to reverse course as concerns around overly aggressive actions by central banks globally have really been cut back amid concern about what the latest conflict will have on nominal growth.
Thank you for these insights, Scott. For Morningstar, I'm Lukas Strobl.